I want to diversify all my investments. I've been investing in 401ks, IRAs, brokerage accounts, as well as a little bit of real estate. I was thinking I would get into more real estate, and that's really how I met James when I reached out to him about doing some flipping of houses.
Most people that look into whole note investing, they have their own day job. They don't want to be fixing and flipping a house. They don't want to be dealing with tenants. Instead of buying and selling properties, you're buying and selling notes, paper, on the property.
One of the biggest advantages of these loans is we're only lending, 75% of the value of the property. So we have a buffer in there in case the real estate market shifts a little bit down or so. Your investment is still fairly safe because we've only invested 75% of the value of the property. So the process, if you'd like to invest in a loan, very simple. If you're deciding whether or not to invest, we can set up a consultation. Before you even decide to buy loans, you can reach out to any of the email addresses or phone numbers on our website. We can discuss the pros and cons of owning the loans and maybe an LLC. We'll discuss what our lending criteria is, our LTV, our requirements like appraisal and all the other details that we request from the borrower before we fill out what you think maybe lending should look like. So we can make sure that we are on the same page. After that, we'll send our tapes over of the loans.
So it's going to have things like property address, loan amount, interest rate, as well as interest rate on the note and interest rate to the investor. So what the note's written at and what we would sell it to you. If there is anticipated value at the end of the project, what do we think it's going to be worth at the end? What's the FICO score of the borrower? What's the borrower's name, experience? Those types of things are all on the loan tape. So you can essentially take a snapshot of a loan off of a spreadsheet and say, of these 4 loans, I like loan 3. Tell me more. And at that point, we can follow up with you and give you more detail. We can provide the actual appraisal. We can provide the full closing package.
The closing package will include the appraisal and the survey, and you can really kind of wrap your head around whether or not you want to purchase this loan. Now, if you do say you want to purchase a loan, that's all you do. You just tell us, you send us the funds, we'll create an assignment for the mortgage and a launch for the promissory note. We generally will hold on to those in the office for safekeeping, but certainly the investor can hold on to it if that's their preference. It's their loan at that point. We'll continue to service it for them. And that's really the process.
General returns on whole notes with us is going to be generally 2 less the rate. So on a loan that's 12%, we would generally sell that at 10% in a rate of return to the investor. Returns in general vary because interest rates vary. That's all part of the process, and each loan's written at different rates for different reasons.
And so once you've purchased a loan, we remit payment to the investors roughly around the 20th of the month. That allows us time to do our accounting of all the money coming in. If there's any non-payment, we try to resolve it before that date and get the borrower to make the payment.
We are attorneys. We ensure that if our loan does go bad, the borrower stops paying or it goes past maturity. So we step in and handle demand letters and then foreclosure proceedings if necessary. You still own the note. You would be able to collect on that note, foreclose on that note. You have all the legal rights to that note.
If you're an investor and you're interested in investing in some of our loans, go ahead and put your information below and we'll send you our tape and you can take a look. And if you have any questions or would like to purchase any of the loans, reach out and we'll get right back with you.